Okay, so I want to try to identify peaks and valleys using my indicators, and concentrating on these momentum indicators down here. These are not just momentum; these are volume-based momentum. So take into account volume. The gray ones indicate there's no volume, so you ignore those. And orange and red ones mean its momentum is going down, and then the greens mean it's going up. So the point of transition from red to green, that's where the same thing is. That's where the valley's at, right? Um, to make it more legit, you should have, this you see two orange and two reds. That's four downtrends. That's pretty good. I mean, you could probably get by with just two, like two reds and a green. So we're going to identify using this indicators. We're going to put a violet rectangle around these guys, and that because that shows that it's not just it's kind of a strong trend, and then a vertical one up here that says, hey, this is really we think it's really a valley. Notice also that one of the arrows is caught in this, so that's a double confirmation. So we have two confirmations that this really is a valley. Okay, so we can look at some more ones. Like over here, we got all these reds and oranges, and then it turns green, right? And so this here is a valley as well. We don't have the arrows this time, but one thing we do know is that these guys here, black triangle, are like intermediate volume, and they're pretty big candles. So when it goes from red to green, that's a really great indication, and especially at this size, that it's a valley. Notice that these are big bars and these are little bars. These big bars come at the like 720. So this is sort of like what happens at the beginning of the day. You have really big bars because it's a little volatile. It's whatever. Its price hasn't been established, and then we go down to smaller bars because it's the middle of the day. So right here front is the transition between the beginning volatile part of the day and the middle part, non-volatile part of the day. Okay. So this video is mostly talking about the middle of the day, non-volatile part. So we go along. We got three orange and a green. That's so this is why I got a vertical one here saying, hey, it's a valley. Over here we got four red ones and a green. That's a valley. Two red and a green. That's a valley. Would like to have at least a third one here. But you'll notice that we have three arrows. So those are pretty good valley indicators. So now I want to talk to you about peak indicators. So when you see a transit, the black one is a solid black versus the gray. That's a pretty good that's my indicator that it's a peak, or it's it might not be a peak, but it's like sometimes if it's like a steady level, steady level for a long time, you'll see a black. And so here we have a black and a gray, right? So that's a legitimate. That's like a peak or a steady level. Sometimes you might have a black and a green. Well, green means it's going to go up, so that's an oxymoron. So if you have black and green, a black square and a green square. If you had a black and green square, like over here, black and green, that would not be legitimate because green means it's going up, black means you're at the top, so it doesn't make sense. So this is not legitimate. But if you have black and just about anything else, black and gray, black and black and red, black and orange, then that's legitimate peak, or at least a flat line for a long flat line. Okay. Peak. So I call these a black top or black flat line, but in this case you can see it actually does go down. So if we look at for black tops here, that's a legitimate black top here. Does it make sense? A lot of times peaks form at the top of big long green bars. See, it's a peak. Here it goes up, it's a peak. And I guess when those happen, I call them the big green bars. That's sort of like a peak, at least a temporary peak or flat line. Usually you're going to go on, I don't know. So anyways, there's that thing. Here's a big green bar, and you notice it's like it goes out above it a little bit, and then it flat lines and it heads down. Um, so okay, so those are peaks. Another way to find peak is if you have a green bar and a red bar, and then these are intermediate volumes especially. Sometimes you have a green bar with no triangle on it. But then the red bar has a intermediate or blue volume. Blue volumes are the best, but at any rate, this is a green and then red is a peak, and then opposite, if you have like a green and a red, that's a valley. Okay, so the other thing is, if we're trying to look, now that we've identified peaks and valleys, what can we use to make predictions ahead? So so we can place orders, levels or stops. So like for example, if we would have known ahead of time, if we would have said, hey, there's a green bar, let's buy in. By the time we would have bought in, it would have started going down. So that's not a good situation. So you want to be able to make some predictions ahead of time, and at a certain price level. So hence, I would like to talk about these horizontal rectangles. So far we've been talking about the vertical triangles to identify peaks and valleys, and now we're going to talk about the horizontal ones. The horizontal ones are ways we can use to predict peaks and valleys as well. Okay, so yeah. So okay, so the way you do these blue, they're bands. We call them blue horizontal bands. Is basically you just look for like these triangles. Like that means there's some volume. Blue ones are the best, but blacks are okay. And so you just make a rectangle. Like here's a triangle, to try to encompass a bunch of triangles, but not make it too wide. And this is a sign of a top, right? And then notice over here we got one, and here we got one. Here's a blue one, so that's a powerful one. So we can draw this one across. So we got these blue horizontal bands. Then there's the horizontal bands that are representing the big green bars or the big red bars, right? So I think I tend to use. I'm still learning here, but like on an uptrend, I would use the green bars, and on a downtrend, I would use the big red bars. So on a downtrend, you'd use the bottom of the big red bar. On an uptrend, you use the top of the big green bar. Does that make sense? So you can put in these horizontal bands, right? Okay. So, and then of course you use these diagonal resistance and support lines. And then again, one of the big rules of thumbs is to, if you're in a downtrend, you should do shorts, and if you're in uptrends, you do longs. Okay. So in the case of a downtrend, so you can see how these bars are coming down. This is a long downtrend, and so here's the resistance line, the diagonal resistance line coming down for the the downtrend, and right over here is where it breaks through, but it doesn't break through much, and so it breaks through a little bit, and we can start drawing our diagonal lines. Right, here's one here, here's one here, here's one there, and then it breaks through that one. So now we can draw new diagonal lines here, 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 and finally it breaks through there. So how do we use this? Okay, so basically we're in a downtrend, and we know we hit a valley, right? And so the idea is we're going to continue. We think it's going to continue to go downtrend. So we want to enter on a peak, right? We want to enter on a peak. So I mean, we can look at this and in retrospect and say, hey, that is a peak. But what I want to point out is we have several indicators that this is indeed a peak. Or this one, we only have a couple indicators. So for example, see this blue line here coming across? That's one indicator that we're at a peak, but actually because of this purple line here, we know that this is right there is a valley. It's a pretty strong valley, and we got an arrow. Two things say this is a valley, so this blue line isn't legit for our purposes. Well, this blue line actually started here, and it kind of made a prediction that there's going to be a valley here, if that makes sense. So that's not a blue line. So this is a valley, and this is our starting point. And so we want to be able to get in. Since this is a valley, we want to get into the next peak. So this blue line doesn't help us at all. All right, so now we're coming along, and we have another valley. And this is a peak here, but you notice there's no triangles, black or blue. So this is sort of like a fake peak or small fake peak or whatever. And all of a sudden we got a green bar coming across here, and we can draw anyways. So and then so we like, oh, it's going up. We don't want to chase it, but we know that if it's a big green bar, might have a few more green bars, and then it's got to turn around. All valleys have to go up and form a peak and turn back around again. And the next one's green bar. Now we got a red bar. So now we have our first indication that, hey, this is a peak. Two of these, a green one and a red one. That's one confirmation. We come down here, we got a black and a gray, and so we draw this green line up here. That's confirmation that it's a peak. So we have two confirmations that it's a peak. And lastly, what we do is we got this red bar, and and we come across here, and we say, okay, that's the peak. That is the peak, right there. So we can enter the trade, either a market order, or we could draw a line across. So we'll put a activate this. These blue dash lines is what I use to. So I guess our enter value is going to be right there. And this is going to be a short because we're on a downtrend. So now we're on a downtrend. We've entered it. We've identified the peak 3 different ways. Think it's going to go down. We hope it's going to go down. We've entered here, but we need to put, in case we're wrong, we need to put a stop loss in. So you see these two guys are here, and there's this line here, and this line here is at 94. This horizontal line is at 87, and we've entered here at 81 or 80. And a good rule of thumb is a 0.5%. So 1%, we point to 20 cents, 10 cents. So 10 cents would be okay. So at 81.91. So we could put a stop loss above here, and that would be, if we lost, we lose 0.5%. So that's our stop loss, and really it would be called a buy stop. If it gets this price or above, it'd be a buy stop. So we've entered here, and look what happened. By golly, we got a big downward red arrow, and so now we can even extend this diagonal support line here. It comes to there, right? Comes down and hits it, and so it happened. But so we got 2 things going on here to exit. One, we have a stop loss, and as the price goes down, we'll keep on moving the stop loss down and down and down. That's one way we can do it. The second way we can do it is we want to try to predict how far down it will go. How, you know, and so one way we can make predictions is we connect up the valley here. See, there's a valley there and a valley there, and so that forms our diagonal line that we're using, the support line. Well, it we can sort of predict it's going to break through there, and anyways, it hit there, so that you can see how it got down that far. Now we have a red candle and a green candle, so that kind of tells you that might be the bottom there. So we got two things that say that this is a valley. Now, if we look at these guys down here, we got green, orange, red, and green, and then before that was an orange. And so we got a couple things that says that's a valley here. So we might want to get out. And if we got out here, it's 64. We might not only get here because that's the next candle, 68 to 80. So that'd be a 12-cent gain. So that'd be about a 0.6% gain. And there'd be nothing wrong with getting out there. So like I said, the second thing we could do is move our stop down lower. So let's duplicate this. This is our buy stop, and we're moving it down, and we can move it down to here because one, it's above here, that the peak, the highest value there, and it's also even with our entry point, right? So if it shoots up, we've made a zero. We haven't won, we haven't lost, so it's okay. But we want to give it a chance to go back down. And I also want to point out that we're only having two. This isn't a really strong valley because it's only two, orange or red, only two of them, and then a green. But we could have got out here. But the other thing to note is that since it broke through, it's probably going to keep on going down, maybe. And if you look at this blue line here, that seems like it's a pretty good stop. So we could put in a stop right here, stop loss, or an exit point would be a better point at that point right there. This is a horizontal support line, and that would be 58 to 80 would be 22 cents. So that'd be like 1% gain. I think that would be a good trade. So I would say we could put in a sell stop here as well, thinking that we could exit out here. So this would be a buy stop here in case it changes direction, and this right here would be a sell stop in case it goes below the low here. Okay, and I think that's a good point. So I'm going to activate this property and go there. So there you go. Now you notice that there's two red, not red, but these blue triangles. That means there's lots of action going on. And then this candle here is red down, but there's no volume. There's no black or blue triangle here. And then we have another red with a black candle, and then all of a sudden, boom, it shoots back up here. So that was how that trade is played, based on the indicators I have. So I summarize it here saying that an orange means it's a big bar, a violet is a valley, so green is a peak, blue horizontal is a volume line. I didn't talk about this reddish line here, which I should have. That's a red horizontal line is the on a downtrend. So at any rate, I'm drawing these diagonal lines, right? And the first diagonal line here it breaks through. So that when it breaks through like that, that means this diagonal line is no good. We might be doing a reversal. You notice here we got lots of triangles all here. So this is probably a major turnaround point. And then here's our next triangle comes across here, right? And diagonal line. And notice there's a big bar here too. So this diagonal line, resistance line, is broken through here. So we have this breakthrough, that breakthrough, and it seems like we're on our way up, like we've done a reversal. Here we've been going down, now we reversed, and there is some horizontal breakthrough bars. For example, we could put one there, right? And because this is a green thing here, so if it breaks through this one, which it does right there, so that's where you get the big candles, right? And but then it breaks through this one, it hits that one. So now this might be the real peak, and it's not, and then this might be another reversal. So anyways, notice when it broke through here, right there, and then it broke through there, or didn't break through it, hit it, and didn't really break through it. We have a black down here, which means that's a top. So how would we play this thing? Well, reversals are pretty hard to catch. We see it going breaking through here, right? And so then we need to do is say, hey, all right, if this is going to be, this might just be a temporary going down. We want to catch the peak. So it reversed here, and now if it's going to go head back down, we need to try to catch the valley, right? In other words, like this day, it goes up and comes down, up and comes down, and you notice you have a green and a red, so that could be a peak. So you have a quick valley turned around by a quick peak, and then it looks like it might be coming down. Oh, dang it. Trend line. Coming down like that. But we don't have any valley indicators here. We got valley, this might be a peak, and then it drops here, but we don't have a valley indicator. So if we're waiting for a valley indicator, the next one we actually get is with the purple lines way over here, nor do we have a peak indicator. So we're kind of in reversal land here, like what's going on. We've been on a downtrend, right? So we should not be hasty to think it's going to go up. So we might be tempted to say, all right, it dropped down, it's going to come back up to this point here, and then it's going to drop back down again below this point. We have this diagonal line. So we were looking for peak indicators. We don't see a black top, we don't see any arrows, and so we're looking for a peak, and we have one indication that there will be a peak. One indication only. It's this diagonal line, and that's not good enough to enter. This was a peak, and then it dropped back down. This happened too fast. So this could have been an indicator because green and black, and we had volume, and it's close to the diagonal line. But then the next bar, it dropped back down here. It was enough time to go up, but we say, okay, when it comes back up here, let's look for a good indicator, and we don't get any good indicators except for the diagonal line. We do get a green candle here, and then we get a low volume there. And one other point is that this is actually sort of like a flat, it's forming a new support line. Here's a peak and here's a peak, and so now the question is, will it break through this peak line? And if it does break through that horizontal line, it's also going to have to break through this diagonal line. So that'll be a good indication that the thing is reversing. So again, for reversal, it broke through this diagonal line. It's broken through that diagonal line, broken through this horizontal line. We haven't seen any peaks down here. So now we have all these indications that it's going to go up. It breaks through here. This is the breakthrough. And now what we have is a reversal because, and you can see the line coming up here. And so now this is a legitimate peak, but now this is a peak for an uptrend. All right, and if you look down here at the indicators, it's all gray, green, gray, green. So all the indicators that have any volume at all to them are green indicators saying it's going to go up. So this is a reversal, right? And but this is a peak, and what we want to go for a long trend, because now we're in a long trend, we want to buy at a valley, so we want to enter in a valley. So one way to find valleys is these blue guys and orange guys, these horizontal lines, is one way, and we can extend this, keep on extending this over that way. And this one over here is a horizontal line, but that's at the peak we just found right now. So a valley could be here where it crosses that right there, and you notice that there's a diagonal line, and then there's a blue line here. So this is, and then over here we got a black and a green, and black kind of means it's at the top, but this is not a legitimate because you have a black and a green. So this could actually be, we could consider this one as a valley and enter here. Legitimate valley. A better valley is if we get something like this. So at any rate, we could also draw a line across here like that, and it would go across like that. So it would be okay to enter here, or it'd be okay to enter there. So we would see this. That you see, if we enter here, what are our indicators? We got small little candles. Those are bad indications. So I want to enter here because there's small little candles. It's a patience game. So this is a valley, but there's small little candles, and I don't have the purple, the violet indications here. I don't have any arrows. So we're gonna wait. We're gonna wait. It comes along, and now I got 3 up arrows. I got my purple indicators, which is 2 red and green. I got this horizontal thing here. I got red candle to green candle, and I would say that's a pretty good indicator that that's a low. So I'm going to enter right there, and the next candle over would be that one right there. So now I've entered, and now we got to figure out how high it's going to go. Well, we have 2. This is a resistance line, that's a resistance line, and we could even draw another resistance line there, I suppose, but that's not a high volume, so it would be way up above it. So we're not going to do that. We're going to say, well, how high is it from here to that one? 94 to 75. That's a 20 cents. 20 cents. So that's a 1%. I'll take 1%. So we go activate, and this is the support line right there, right? So what I'm going to do is put in a buy stop. I'm going to put a buy stop right at a little bit below that line to make sure we catch it. Right there. We've entered here, and second thing we're going to do is we're going to put, so a buy stop means if it gets to that line right there, I'm sorry, I said a buy stop. I meant it should be a sell stop. We're doing a long. We've done a buy here, And if it gets to this point here or above, it's called a sell stop. So that's my sell stop. The other thing we're going to do is, since our this is a pretty powerful horizontal support line, we're going to come over here and put a stop loss. See, there's a line there, there's some volume, there's blue volume here, so we're just going to put it something like that. So we've entered here in 74 and our stop loss is at 65, 9 cents, so about 10 cents, a 20-cent stock. So this is our 0.5% stop loss. From here to there is 0.5%. So if it reverses and goes down below this line, we'll have a stop loss. On the other hand, and we'll lose about 5%. On the other hand, if it comes up this line, we'll make about a 1% gain, and that's what we'll do. Boom. So I hope that was helpful. If we continue to watch what's happening, that's down, up, and it seems like it's trending up and up and up and up. So I hope that was helpful. That's the end.